Hey everybody, welcome back to Markets and Sectors, and happy Friday to each of you. Mike Fairbourn here, Senior Manager Trading and Derivatives at Charles Schwab. Folks, plenty to look at today, and I've dove in a little bit deeper into some of the stocks that potentially may be impacted if there is an acceleration within the global tensions with Iran. I want to talk about that, as well as diving into some stocks that might be showing the strongest portions of the market relative to others, and really try to find out where that institutional money may be flowing into. I want to talk to you about a scan that I devised really for you guys, thinking big picture, what's really moving in the market. So look forward to diving into that with you. Hello to all of you here today. Hello to you, BJ. I might have missed a couple of names at the very top, but welcome to you as well. Her name was Lola. Welcome, Lola. Great to have you here, as well as Jay Richardson. We've got Manuel, we've got Michael, Scott, Will, and others on board. Folks, any questions, comments you have, definitely throw those in the chat box so we can address those for you today. Looking forward to it, and looking forward to some sunsets as well, Will. There's been plenty out there as of late, but joining the chat by a great friend of mine and colleague, Mr. Brent Morris. We've worked together for coming up on 20 years. Not quite there, but a couple of decades. I know Brent really well. It's great to have him here. And you can follow us both on X, and he's posted that. Brent Moores CS, encourage you to follow him. Mine's Mike Fairbourn CS. And we'll go ahead and dive on into things right now. We've got plenty to look at. All right, folks, information here is provided for general information purposes only. Now, the paper money software application is for education purposes only as well. Investing does involve risk for some products more than your initial investment. That's very important to remember. Okay, in addition, futures and futures options trading involves substantial risk, not suitable for all investors. I'd like to have those slides there because I do like to reference those. We do not trade here, but we have those disclosures so we can reference the futures charts. Next up here, past performance, no guarantee of future results. Historical data should not be used alone when making investment decisions. The stacks is not a tradable index. We'll look at the stacks. We did get a stacks release this week, and I'm looking forward to taking a look into it. Maybe you guys are as well. It comes out a little bit after the first of the month, and so we can dive on into it and just see what that's all about, what's going on there. Okay, so let's go ahead and tune over into the markets here. Big picture, you can see where we're at right now. Here's kind of a full screen view. Now, if I come up top here, there may be one of the biggest moving averages that we need to be mindful of, that we could be, close to approaching over here. Sorry, I added the old-fashioned way. I'm not as quick as Brent, how he adds his stuff in here. One day I'll get to do that. I will get there for you guys, but in the meantime, there it is. There's the 200. Notice the 200. We've come all the way back down on the S&P 500 index, right back down to that range. And this is just starting off, just from the get-go. I wanted to address this here. There may be some key support, or if we break below it, the possibility of key resistance and the possibility of an extension to the downside. Now, what I want to say is, big picture, yes, we did have a range over here up top, clearly right around 7K. We got down below here, just below that 6,600, which is really represents now a 400-point range. We were stuck in a 200-point range for a while, but what's fascinating is that's exactly where that 200-day is coming in. So the 200, I would anticipate, because we have more recent data up here, we're looking at 200-day moving averages, and we got to understand that now we're getting to the point where maybe a majority of that 200 days is up in this range, telling us that that moving average should just still, it's kind of flattening out a little bit, but it might tick up a little bit. But what's fascinating is it's just very, very close to that next round number, where we're very close here, several touch points there, and then over here and over here as well. So be watching this. What could it tell us? It could tell us some changes if the market begins to dip here. A lot of times, though, you can hold up. The one thing I would say, too, is obviously a lot of things can change with the scenario in Iran. I wanted to talk about what that really looks like, some ideas that are floating out there, which I think it's logical. I want to go through that process with it so you guys are aware of what key events could happen and what events that could trigger in a response to, have an impact on oil as well. But we're getting close here to an oversold area on the S&P 500, really going back about a year. It's close to a year. I know we dipped at this major decline over here where we bounced, capitulation, you'd have to say, on the S&P 500 where we did get an oversold reading on the RSI. The last time we came to these levels, interestingly, it was right about here. And I've noticed this for years with the RSI. Look at the prior lows, because even though price ranges could be somewhat different, in this case, they're somewhat similar, but they can be different. Notice we've gone up a little here. RSI, virtually the same level here at the 200 as well. We happened to bounce, right? The last time we were there, that right there was a bounce in the market. It was also, support, and it's also, support again, because we're right there. We just have one additional support, which is the biggest moving average that, well, I'd say the most popular moving average that institutions might follow. A lot of them have said that. So there you go. Let's go into the market posture just to kind of tie into this a little bit more. There is our 200. You can see some of the others that we were at. For the longest time, we were holding what? The 100, half of that 200, very common and a very popular sort of an indicator, moving average for the S&P 500 in many cases when it's trending up. Notice right there, that was that last major low. Well, we hit that at 6,800. Now we're near 6,600. So I think we have a pretty interesting idea where that's at. But right now it is intermediate term showing weakness, but again, it may be inside a larger block right there, what they refer to in technical trading as a rectangle. Okay. I've also heard a Donchian box and things along these lines too, but yeah, there you go. So here we go. Notice too, what represents that very, very closely. It's not perfect, but it's another tool that traders will use, is the 40 weekly moving average. It's a weekly moving average here, and you can see over there, it's right at that point. Now those weeklies can be big. You can see a little bit of a touch point right there. We had a touch point here and we gapped lower, found resistance here, found support right above it. It's interesting. You can go back, look over here too, a little bit of a dip. As soon as we went back up above that level, it was really off to the races. So there has been a historical tendency, and you'll find that with trends. Doesn't guarantee it's going to happen in the future, but these are some of the tools that traders will look at, give us an idea of what could happen going forward. Now back to our regular trades over here. NDX holding up pretty well, but this long-term sort of bottom is right. Okay, support level. It's not a bottom. Short term, yes, but we don't know if it'll remain a bottom, but it has remained here. Support. Notice that? We haven't bounced off that level yet, but it might. We've done it how many times before? Let's count it. 1, 2, 3, 4, 5, perhaps. What happens over the weekend could play a big role. I'll get into that in just a second in terms of the Iran conflict, and keep you guys up to date with even information coming in today. But as you can see over here, I do have a Russell 2000. That's taking one of the biggest hits over there. We're still also actually right around that 2,500. Big number. It's a big round number. 2,500. Rut. Oh, notice over here, major high right there. Okay, that was at 26. A much more major high right through here. We dragged there for, there's about a month, and then we dipped, and then we went about another month above it, and then here we are again. So notice what I did between those two levels there? It's $100 range. That's it between those two, but that is the range of, we're at it now. It would be actually support here and resistance here. So it's kind of an interesting channel, isn't it, that we're looking at on the Russell. And remember, with the Russell, small cap stocks can lead the way. They can lead the way up or down. So even if the markets tend to tail off a little bit, like I'm talking about the S&P and the Russell, the S&P and the NASDAQ, if they tail off, but you start to see a bounce here, it could lead the way for a bounce in the other areas. Notice too, that RSI, very, very similar to the S&P down here. Look at that. That was the last major low, coming at different levels here, but just watch the RSI at the same levels too, because it's at different levels. But yeah, it's a different perspective when we're looking at the Wilder RSI there. Okay, as we dive into that. All right, so let's do this. Let's go into oil, and as we take a look at oil here, I wanted to talk about. There it is. Okay, there's oil. So what I like to do when there's a lot of volatility and there's a lot of data points that are coming within here, but you know what? When we're on a daily chart, we really don't see it. I'm not seeing a lot on this chart. This is what I'm seeing on the chart. That, with the exception of this bounce, it came down. And just as a side note too, which is kind of interesting, if we do a quick comparison, let's just see how the price of gasoline is holding up. And that's going to be the RBOB or the RB over here, /RB, another futures contract. What do you see there? How about highs? And by the way, you're looking over here. This is oil, y-axis oil pricing. Over here is what you're looking at for RBOB. But remember, this doesn't include the tax at the pump, and that's why it's going to be more expensive. What's interesting, though, is because I was at Costco earlier this week, because it's just like fairly close to my house. It was about $2.58. I'm just giving you a general idea. It's probably up from there, but it's, yeah, that was interesting, too. Of course, maybe that was over here in this range. Anyhow, that's a total side note. You're going to get various prices. All I'm trying to highlight is various prices across the nation. But if you look over here, we really didn't dip nearly as much on the price of gasoline. It does tend to be a little bit sticky. There can be supply chain issues that they keep the price up to offset those risks as well. But anyways, it's interesting to kind of compare those two. It can shoot up, but then it's often slow to come down. They say prices of gasoline are sticky on the way down. They shoot up just as fast, and they even go higher sometimes. Even when oil goes down, they tend to just barely come down a little bit. So anyways, as we take a look at this perspective here, go to a 30-minute chart and try to just imagine, if you will, we're looking at a daily chart here, because you're getting a lot more data points. And all I was kind of mentioning is after you have a big run up like this and you start to consolidate, even like this, I mean, even on this sort of a scale, shoulder, head, shoulder. And what does that oftentimes do? We talk about it in my price patterns class quite a bit. It tends to can create a bottom. It's an inverted head and shoulders pattern, right? And with that, what are you getting afterwards? Well, we're getting, I would say right now, a trend. And did we make a new high today? We did. So there's your high right there. We just hit it. And, could we consolidate on these previous levels? Sure, we could. So we need to be kind of mindful of this. Now, a couple of things that are coming up right now, it's being stated by a number of different analysts that, $100 a barrel is not what it used to be. It used to really mean quite a bit, especially like in the 1990s and way back when. In fact, there was a stretch, I want to say about, let's see, it was a while ago, but maybe, let's see, if you go back 2-3 years, we were at 90 for, I want to say like a month, a year, in the $90 range or so. So it's not like this is our first time in the 90s, right? In the 90 range. This is just for a short period of time. We know what's spiking it. But inflation could have made the 100 not as potent as it was before. So what they're saying is the 150, folks, the 150 level. Let me just show it to you right up here. If we stay up here for an extended period of time, inflation, everything else, that's like a real shock to the system. So, you kind of have to say, if we get above these highs, the market might respond with more volatility as well. Where does that put us at? Well, it's 119. So you say, hey, 120 plus. That could also create more volatility in the market as well. Just keep that in the mind. Keep it in your mind. The VIX might have, some serious moves associated with it, etc. Let me just quickly do this too, because I want to highlight this point as we kind of break down some of the details as we're looking at Iran, because they're stating, a lot of people are stating, military historians, etc., and just analysts are saying that cover these kinds of issues. They're saying basically that the U.S., Iran's goal is not to defeat the U.S. militarily, right? but it is to create sort of chaos around the Straits of Hormuz, the disruption of global oil, and have that be a pressure point with all the other nations around the world to create a truce so that they can stop, the same regime stays in place, etc. Now, if you come over here and you look at this, like if we're just looking at the Straits of Hormuz, what is interesting is you come over here. This is just a real quick note if you haven't seen the map of it, but that's Oman. And the whole thing, I mean, it's really quite close. Straits of Hormuz is just right through here, right? But this is all Iran. So they're very, very close to the Straits of Hormuz. I didn't know until I looked, but they actually, they're joining it. I did look at it a little bit last week, but it's just like, hey, that's so close. The good news is they did, 2 oil tankers have made it through. One just came within the last 24 hours. I think it was an Indian ship that did get through, but there's only a total of 2 that have gone through right now. But that's kind of the pressure point, right? And okay, so one of the key things we could think about just as traders, investors to be mindful of here, there has been some attack on some of the countries within the Middle East and from Iran. Now, could that create tensions too? Yeah, and if they call a truce, that would stop, and that could sort of get tensions back down where shipping could occur. Let's say like the forces don't back down because they want a regime change. Where it can get bad, and this is just something that could really increase volatility too, is if you've got Iran here, just as an example, and they're shooting off weapons to other parts of the Middle East, and they're specifically attacking their oil production infrastructure. Now, that is going to have a substantial impact on, it can, because it's going to have a major disruption on oil. You have to be really, really mindful of that because that could ramp it up to a whole new level because now their own countries can't produce oil. And they do have a lot of equipment to disrupt that. So I just want to throw that out there because that could raise the stakes quite a bit. And they have talked about $250, $300 a barrel of oil, and that would make, I mean, obviously a massive difference. There's a weekly chart. Imagine what that would look like up here. So just keep that in mind if this is going back 15 years on that weekly chart. So they started tracking infrastructure, but that might be one key risk factor for you just to keep an eye on. And be mindful if you start seeing more bombing in those sort of Middle Eastern countries from Iran, it may be something you want to be aware of in case they start going after infrastructure too. I mean, that could be a problem. Anyways, look at this. Just as a quick note, I want to pull this guy back. Wow, that's a big doji, isn't it? Right near 100. And what does the doji mean? This is weekly chart, but that would mean a battle between the bulls up top, it pushed back, and the bears down below. It's a tug of war, and sometimes it means reversal. We don't know if it'll happen around 100. It's going to depend on what they can do. They're in a weakened state for sure, but I understand they still have a lot of ability to attack. So anyways, I wanted to get that off just so you guys just be thinking about what could happen next and just some things to be mindful of that could accelerate into other areas that could really lift the price of oil up. Now, on that note too, what I wanted to do was look at the S&P 500. Here's actually the ES. You can see over here on the ES, and I do look at money flow a lot of times. Where are you? There you are. So the money flow has been shifting down, but you'll notice we didn't take out new lows on the S&P 500 E-mini contract, right? We didn't. So we're still kind of holding above that range right there, sideways. There we go. And if you start to break here, that can be a negative sign too, that you're just getting a lot of outflows. But right now, actually the volume's still holding above that level. And that, all else equal, it's not a negative sort of divergence. Now, a quick note that you want to think of if things do accelerate, or just to kind of protect yourselves a little bit, just to be mindful of what's out there. I looked this week for this class at companies that had significant exposure to the Middle East. Specifically, if I go to the S&P right now and I look in the Market Watch tab, and we take a look at the S&P 500 over here. I'm not going to be able to find all of these, but I wanted to highlight that Coca-Cola, okay, so Coke uh, generates about 22.6% of their revenue. This is for 2025 from what they refer to as EMEA, which is Europe, Middle East, East, and Africa. This is how they report it on their SEC filings. You guys could check that out if you want. You know, that's just on a different site, but I'm just saying they have to file with the SEC. Just as a side note, want to let you know, but that's how they report it. They don't say this is the revenue we get from the Middle East. They say, you know, for Coca-Cola, as you look at the companies here, they say it's a kind of a broad basket in Europe as well. So the other companies, in fact, I'll just put them down over here so we have them. I'll just do this real quick. Yeah, because there are a few that I'd want you to see. Oh, there's my scratch pad. I don't need it. Okay, right here. Scratch pad. Let's pull this guy down right now. Okay, so 20% or more exposure to Middle East, and that could also mean other countries as well. And I'm just going to put this out because it's not just Middle East. I'm just going to abbreviate these: Europe, Africa, and India are other ones too. But not only Europe for Coca-Cola. That's how they do it. Okay, that's for Coca-Cola. The rest is just Africa and India. But first of all, so we have Coca-Cola, Coke. The next one is going to be Mondelez, MDLZ. They have about 20.6%, and that they refer to that as Asia and the Middle East and Africa. So that's a little bit different. I'll just put these in here because that is Middle East. Oh, I'll abbreviate them, folks. This is how they do it on the SEC stuff. E dot M dot E dot A are those countries. This was 22%, 22.6%. This takes a while to actually look up, but it's interesting once you get it down, just as a reference point, so you're mindful of what could go crazy if certain things are cut off. But I don't know. It would have to kind of accelerate a little bit. This is A dot M. That's Asia, Middle East, and Africa as well. Africa. Next ones is going to be notice a lot of these. I mean, they're just like consumer products. Procter and Gamble. This was India and Middle East, and that's only 5%. So it drops off a lot. These are the only companies in the S&P 500 to generate this kind of revenue from that area. It dips. Last one. Well, let's see. PepsiCo 5.3%, and a lot less than Coke actually. And then Colgate-Palmolive. Look at that. All kind of like staples. And that one's about 5.8. It's generally within these same ranges as well. So I don't know what that looks like, but I was just going to show you this. If we look at a couple of these, normally these hold up under these kind of conditions, but look at PG. See, it's coming down. Possible exposure. I mean, if they were to knock off 5%, it could be substantial. There's CL, pretty substantial move. MDLZ. So just be mindful of that. Normally, we weren't seeing the staples. They were actually rallying up until things started to kind of heat up. So keep that in mind. Last one, let's take a look at Coke real quick. Not as much as the dip. Okay. All right. So there you go. Wanted to get that out there to kind of take a look at. Folks, I updated that script for you as, excuse me, as well today. The one over here. Let's go full screen on it. Excuse me, 1 second. All right, thanks for our producer on that. And I just want to do this over here. Show you guys up top here. I want to go back to the 6-month rotation chart. Now, within the 6-month rotation, we can see relative strength relative to the S&P 500. And yes, the S&P 500 is doing this. But but over this time frame, what's really showing the strength? It's not technology. Down, folks, down. Discretionary, down. Financials, down. Look at the others, though. Obviously, energy. The 6 months gives us a pretty good view. Energy, materials, healthcare, basically flat the last few months. Staples have been up, but we just looked at some of those staples. Some of the staples have been down, but the majority have still been flat. Industrials up, kind of a possible flag. RE, flat. Utilities actually breaking higher in the utilities area. Communication services really volatile. That's actually a lower low right there. So that big picture perspective can help us. I put the labels in. Let me go ahead and share that with you guys right now, just so you all have this 6-month one. I've gone into the weekly one, but right now the weekly one, the volatility is so high, it's hard to get kind of that trend. So here is the 6-month with the labels. And if you guys don't, you're viewing this on the recording, I'll put this in the description section down below there for you. There it is. Okay. So now you got it. All right. Looks like you know what? My, sorry guys, my, chat is down. It's not working. So did you guys get that? Can you confirm? I guess I can't find out if it is working actually, because there's no way, unless let me see if I could just restart it or something. Reload it. There it is. It's reloading. Okay. Now I'm seeing all your comments. I wasn't seeing anything. There we go. Yeah, and welcome to those of you just joining us right now. But this could be really, really helpful, folks, in terms of, kind of spotting that, seeing where the strength is coming. And that's where some of those institutional funds might be heading into. I'm going to pause for just a second and just state over here that we did hit our goals in terms of, not goals, I'm sorry. We just hit another level. 185,000 subscribers. Great to have you guys all on board. If you're not subscribed just yet, be sure to subscribe to our Trader Talk channel. We'd love to have you on board. In fact, I'll put this into the chat as well, but it's just under YouTube. If you have access to the playlists, posts, etc. Again, folks, if you're getting value from these presentations, these discussions, smash that like button. It just lets us know that, yeah, you are getting value. If you are, smash it if you are. By the way, also give Brent and I a follow on X. Here is Brent's handle. Got some great content materials down here. Is a recent class that Brent taught, some other points that he's made about oil himself. Great stuff to see. I'll just post this into the chat real quick so you guys can follow him there. And then lastly, myself up top here. We also post, financial contact. There's another video I did myself as well, just recently. So just a quick note on that, and let's get back to it. All right. So as we look at this, one of the things we can do in thinking about this class this week is really, as we look at these areas, it's one thing to see markets and we can see sectors and we can see where those funds are going into. But what companies are really hitting 20-day new highs in terms of their relative strength? I'd worked on this previously and I hadn't been able to find it. I mean, it just wasn't working for me until I created this small, teeny script. And again, folks, ThinkScripts aren't guaranteed for timeliness or accuracy, but I wanted to throw that in there for you just so you'd have it. And this is it. This is all it is. And all it does is it looks for a 20-day new high relative to the S&P 500. And there's some fascinating companies that come up because when markets are going, there's a lot of tension. Where are the funds going? Where might that institutional money be heading? If you've got this up, you can just scan for it and you can take a look at some of these companies. I got 66 coming up in here, but as you go through and look at them, I also sorted this out on beta. If you want to find these that are less volatile than the market has a beta of 1. Of course, if you have this in here and sorting it by beta, you can just come down here and take a look at some of these companies that have been coming up. Are some of those that we looked at last week, those that have cash flows that are linear to oil prices, and that would be oil and gas down here, that exploration and production, Devon, MPC, KMI. Well, let's see. KMI. That's a transport. But let's just take a look at some of these right now. So we're gonna build on this and take it into stocks with that scan. So here it is right here. Those of you guys that are here right now, I just want to make sure that you get this. So I'll put this in the chat here so you can snag that. Those of you guys on the recording, this is it right here. So that's the 20-day new high. Let's take a look at some of these. But those of you guys on the recording, I'll put a link into that ThinkScript class because I go into details on it. I show you how to pull that. And I'll put that link in the description section in our class. And as a matter of fact, I'll just do this real quick while I'm at it. You can come down here and go into the ThinkScript class where I go into it in a little bit more detail. I thought it was fairly enlightening in terms of showing us where really the trends are and maybe even some of the volume coming in at. But it's under the ThinkScript playlist. I'll have this link for this class in the description section here, so you can check it out if you guys want to pull that up or not. But here's that class. If you want more details, where I go to it in a little bit more detail, and there are some others in there too. Again, not guaranteed for timeliness or accuracy. Okay, class, there it is. So right there, so you've got it. And thank you, Brent, for posting that in. All right, let's get back to it and take a look at some of these. But it pulled up companies like this. I'll pull them up as of yesterday. We had Dell. So Dell was on this list. So it's looking at RSI hitting those 20-day new highs. In fact, the RS, and it's hitting it like right now. I'm going to take these off for a second and just throw that on. Relative strength. So you guys can pull it up. Yeah, relative to the S&P 500. I'm just going to do the same thing I always do, is just make this a little bit bigger so we can all see it, especially on our individual screens here. So do you see us breaking up here? Now, this is totally different from the market. Markets have been down. This has been up. You'll find that in this list. You'll find some others in here too, but it's looking for that specifically. I'm just scanning down. Yeah, Devon was in there. Plenty to look at. KR, just some varieties. So Fang was in there. Look at the strength. That's relative strength relative to the market. 20-day new highs. Why is 20 important? What is 20? 20, or approximately 20, is the number of trading days in a month. This is a monthly view. It's a longer perspective than just a week. But we're ramping it up a little bit more. We're going deeper than just a sector, folks. We're going into the individual stocks that are representing these. Okay, so the 20-day period, you can see it right there. New highs. So it's not just RS, but it's RS making new highs relative to the market. Okay. DBN was another one. These are like upstream. Look at this. Just where might that institutional money be going? I mean, and you look at some of these. So one of the things I'll look at in the let's see, the swing trade class are just this potential, the flag potential. If money is going there and volumes, it's a very nice volume spike as prices are going up, plus the RS relative to the market, which clued us in on this entire thing in the first place, could, or is there a more of an expectation, let's say a trader might have, for these types of companies to give us that flag? In other words, if we come over here and look at it, could we then just take this price range right here, which is the standard projection of a price, of a flag pattern, and just extend this to the upside? Sorry, I'm off the charts a little bit here, but I'm just trying to, no, that'd be too high. Sorry, maybe it's, generally you move off, you'd measure it off the bottom. That's what I'm trying to say. And maybe somewhere up here. And in other words, this price is just going to equal this price over here. That's referred to in the swing trade class. We call that a T2 target, termination of the full move itself. But notice we're building on that, aren't we? We're building on this. We're saying, where are those funds going? And hey, by the way, we might just have a price pattern in here that is already kind of breaking out a little bit. Now, we're going to just put in a paper trade in here just because we do that. Just as an example of building on this concept here. But I'm just going to do just a quick trade just to put it in. It's not just as an example that some traders, if they're doing this, is just a total example trade. But if we come over here, I'm going to go good tail cancel, good tail cancel. We'll just go with 100 shares. Fine. And we'll put a target up top somewhere close to that flag. We'll have maybe a stop order down below. And by the way, a quick note on stop orders. Stop orders aren't guaranteed to execute at or near that price. As you know, it's just we have to state that. I'll just put this down as like a 43 right here, right there. And always read through the dialogue here, but just as an example, traders might do this. I'm going to extend this up right now, and I'm actually going to do an official flag pattern projection. I use this little tool down here, and we'll click down here, click it one more time. If that is the flag right there, you can see we had a prior flag right here that unfolded. Might we have another one? Well, we're showing signs of a breakout. Some of the things that traders might look at. I'm just using closing prices here and there. So there's your 100. I'm going to drag this target, this limit, hang on, that's the entry, up here to that level right, just about there. You guys see what I did? Now, the other thing I want to do, let's get that chart back to normal, is I'm going to put that potential exit level just below this range over here, giving it some room to fluctuate, but trying or looking to get an exit down below here. I'm not getting a fill yet. We'll just see if we get a fill. In fact, you can just go like this and drop it down a little bit too to get a fill. Let's see. Well, it did already. It actually got the fill before I sent the new one in. So there you go. But just a paper trade example there to date. Okay, let's continue. So a few more of these we could dive into to kind of look at. We've got just a CVX, obviously integrated. So that's kind of the next level we could look at. But a lot of energy companies, the thing to keep in mind too, with the energy companies, if let's say there is some resolution with the Straits of Hormuz, they might also experience this too as oil prices come down, right? That could also happen. So it's really kind of a play on an expectation of prices going up. So they might be shorter term in nature, but I had to throw that out to you even after I put that trade in, just to be mindful of that. What goes up fast can come down fast too. J&J is in this list, and so is Kroger. You can see the breakout, the recent breakout in Kroger. Kind of been flagging for a little while here. But again, folks, this is right here. You can see that RS really showing us some strength. Okay, these classes seem to be getting more dense with all these different news events and different indicators. We're using the ThinkScript platform to kind of help us along. But now we're just going to go back to where we normally were going for the longest time in periods of less news and things like that, less volatility. It was just a markets and sectors review. Let's take a quick look down here below. Let's see. Let's see. We added a study to find tickers where RS doesn't seem to work. Yes, that's right. Those strength is greater than the ratio. So some of those, that was one of the issues I was having a problem with, James, is I wasn't able to see the RS, effectively see that RS line. It was crazy because it was just that short script, just using the indicator itself instead of trying to create something through those scripts. That wasn't working, by the way. I just used the actual coding within for the RS within Thinkorswim, and it ended up being a two-liner. It was like very, very easy, and just turn it into a scan after that, and then you got it, So that's what we did there. Let's see, all others. By the way, folks, if you're not used to that, once you copy those, just come up top, go into study, when you copy those links, and then just open the shared doc and paste it in there like that, and then hit preview, and then you can find it over in your scans, and it would be right over here. You would just load it because you've saved it in there, whatever name you've titled it, boom, it's going to be in your personal folders. Okay. Let's hit a few more of these as we go through. So how are we doing right now? We're down 45, so we might be ending the day on a down note. Remember, we're very, very close to the 200-day moving average here. And yeah, we did see, obviously, market breadth come on down. Kind of anticipated that, but interested to see what the SPX-EW is showing. So it's broad in terms of the sell-off. This is the first time we've seen the SPX sell off here. So it's the real deal. There are some concerns about Iran, and it really kind of boils down, I think, in many cases to a lot of analysts are just saying, hey, Straits of Hormuz, it's the shipment of oil. And the disruption that the Iranian government can create globally can help put pressure to ease that and to create a truce. And we talked about different ways they might try to ramp that up as well. Okay, we did get that one Hindenburg Omen spike. We have not got another one yet, which is interesting. So prices are selling off, but we're not seeing the type of sell-off for 52-week new lows relative to 52-week new highs, creating that kind of a chasm in the market. So keep that in mind. We did see this, though. We saw a real decrease in the number of NYSE highs right there. Yeah, we didn't see a ton of those. In fact, it dropped all the way down to 40, but do you guys have an idea where some of those might be now? Where might that institutional flow be coming into? Possibly in that RS indicator, not RSI, relative strength compared to the market. We're really just kind of watching where that's funneling into, perhaps with the trend, and volume is behind a lot of those trends. All right, next up. What's interesting here, and this was a lot of this was due to our tariff from last year over that same time frame. But look at this. What's fascinating here is this represents, on a 5-year basis, the low of, excuse me, 10-year basis, the actual low that the market hit today. Where are we at? We don't know if it'll all unfold. Like we said, a lot's going to have to do with news out of Iran for sure, and that's out of our control. But we're just saying it's at the 200-day moving average, the S&P 500, and this is the low on the seasonal time frame too, over the last 10 years. That on average, that's the key. It can tend to be the low. Next up, there's your 30-minute chart. Always keep an eye on this, but it looks like we're closing lower towards the end of the day. And yeah, just a view. Gosh, I have another one too. This is the purple line is the equal weighted NASDAQ, and it is down. So it's a broad-based sell-off. We haven't seen that as much. We saw that on SPX-EW. And here we are moving below the volume profile. So looking at the volume on a horizontal basis, it is interesting. Yeah. You know, one thing I did say real quick, we're just going to do it, that we did mention early on, but there was a lot of information, and that is the Schwab stacks. Let's just take a look at the stacks right now so we could see it. We read that disclosure a little bit earlier, but there we go. Finally, we had buyers, retail buyers, finally come in a big way, just in time for what? A dip in the market. And they've been holding off really since 2022 to a big degree. We've been lagging behind. Here's a view of the market. Here are the other purchases there. But look at that. It spikes up right as prices are coming down. So it looks like maybe some buy-in just before, it went south a little bit. All right, everybody. Well, hey, that's what I had for you today. Keep an eye on what might be moving, the markets next. We did do a trade in here, and I just wanted to state again, because it wasn't in the original disclosures, but those stop orders, there's no guarantee that execution of a stop order will be at or near the stop price. Okay, we already mentioned that. You get that in the other classes we teach by and large as well, but just a quick note. All right, everybody. Well, yeah, if you like today's discussion, folks, smash that like button, lets us know. You guys have a fantastic rest of the day. We're right there. Last class of the week. Hopefully this gave you some ideas going forward, something to think about in the next week and some things to keep an eye out for. On that, have a terrific weekend. Look forward to it. Thanks so much, Brent, for your help in the chat, as always. Thanks to our production team as well. On that note, everybody, see you next time.